Good morning, everyone. My name is Joe Bladdock, and welcome to Canadian Mortgage Weekly for July 13th, crazy Bank of Canada announcement day, where we're here with Sam Thompson. We have a supersized rate hike expected this morning, and Sam and I are going to be going into some of the details with regards to how this has all come about. Sam, welcome to the show today.
Yeah, thanks for having me. It's going to be, a really exciting announcement because I know that, even this year seeing, the 50 basis point hikes to us, we were coining that and a lot of articles were coining that as a supersized rate hike. So the fact
Yes.
that we could see a 75 basis point hike, it does build a bit of interest. And I don't know, they might have to come up with a new name for a double supersized hike or something for this one.
Exactly. We've seen a bunch of rate hikes this year already,
Mm,
Sam, and I think that the Canadian homeowners are no stranger to seeing interest rates go up, set
mhm.
by the Bank of Canada. I know the overnight rate has gone up quite considerably, so let's just get into some of the details today. And
Mhm.
usually, what we like to do here on Canadian Mortgage Weekly on our pre-rate show is just go over some of the news that has been leading up to today. And Sam, I know there's been a lot of news leading up to today that we want to go over.
There definitely has. And I think the first one that we can cover that, many people maybe had seen, on the way leading up was just the fact that we saw the central bank, the US central bank, hike their interest rate at 75 basis point, which, typically we're trending and we follow what we see the states do. So the fact that we've seen quite a considerable jump, the biggest since 94. It does put a bit of weight on this announcement from the Bank of Canada to see, if we'll follow suit.
Really, it will, because you're right, Sam. With all the American and United States policy, their fiscal policy has usually been upfront and aggressive, and Canada has usually followed suit, as you mentioned. And it's a lot to do with our joint economies, and yeah, they've raised their interest rate by 75 basis points. And that's the biggest rate increase that we've looked at since 1994. So a big look back at the 90s there, 27 years. So that's
Yeah.
CBC News there. So that's really, really interesting. Uh, really, it's really pushing a lot of homeowners right now to reconsider what they're doing on home mortgages. I find having
Mhm.
all this news come out the way it has been.
Oh, for sure. Yeah, I think we've definitely seen some of that stress bleeding over into the clients and the conversations that we're having with them.
Yeah, and with that, the central bank also wants to target inflation. And I know that we were talking about peak inflation lately. So there's an article I wanted to go over about that, but we also have an article from CMP News here. Let me share this for everyone. Could the Bank of Canada actually pause rates as the market slows, as we've been seeing, talking about how we've seen a lot of homeowners pause on their decisions at the moment. Maybe they've wanted to move, but they've since paused their plans after seeing what's happening with their rates. Yeah, and could the Bank of Canada pause the rate hikes? I'm not sure. It says here the inflation rate 7.7% in May. That's a very high inflation rate comparatively to the 2% normal inflation rate that the central bank targets for.
Absolutely. And, I think this article goes on to say, the time it would take to actually achieve that 2% inflation, will be very aggressive, or could take a substantial amount of time. So again, I think the sentiment of the article is, I think was quoted, right? Come hell or high water, the
Yes.
central bank is going to target that 2% inflation rate. So I mean, it sounds like it's pointing to the fact that they may not see a pause um, in those rate hikes until we get, inflation to maybe a more manageable number, maybe not quite 2%, because that's quite a lot for the second half of the year, but taking action towards that.
Absolutely, I agree, Sam. Maybe we can move on now to just sort of what the bond yield has been up to. I know that we've seen the bond yield uh, rise quite considerably since September of 2021, forcing fixed rates, especially the 5-year fixed rate, to rise above 5% for the first time in years. So what's the bond yield been up to as of late? I know that we've seen a little bit of softening. Where is it at today?
Yeah, so currently it's sitting at about 3.19%. So we did see a dip from a previous high of about 3.5 down to around the 3% range. And at that point, we were monitoring just to see if it would continue a downward trend or if it might, flick back up and stay in a tightening range. So it does look like it has flicked back up. We haven't seen a continual downward trend. It has remained over 3% since the start of June. So again, we'll have to further track and see where the rate is at and if it's affected at all by the Bank of Canada's decision today.
You bet. Usually there is some sort of reaction on the bond yield market, so we'll have to watch that. And join us tomorrow for Canadian Mortgage Weekly Live on our normally scheduled time at 11:30 a.m. on Thursdays. We'd love to go over what's happening with the bond yield as it reacts to this interest rate announcement coming up very shortly. Let's go over the CDOR rate. I know it's a variance from prime. We look at that as a indicator if variable is a good option for mortgages. I know that I am in a variable rate mortgage currently, prefer it for the flexibility it does offer. And, we're looking at a good option still, Sam, aren't we?
Yeah, of course. The CDOR is sitting at about 2.5%. So again, it has been on a steady climb, but again, depending on how we see this rate announcement go, it is also going to affect the prime rate, which will likely affect the variance from prime, the CDOR rate. So I do think that it is a good option, and even if we see a rate hike, I think it should still indicate that it's a good option. But again, we can cover this off in more full detail on tomorrow's episode when we have that firm prime rate and we've seen what the Bank of Canada does today.
That's right. Articles. Let's get into another article right now. As we were talking about news earlier and we shared some articles, I did want to show everyone this article that Sam and I were reviewing this morning. Sam, I know it's always a consideration when folks are having a difficult time with their mortgage payments. We see it few and far between. However, this article coming out by CBC is sharing that nearly 1 in 4 homeowners say they would have to sell if interest rise more, according to the survey. So this is quite a consideration because this is not really what we're seeing on our side. We're seeing a little bit of it, but quite a statement.
It is quite a statement to think that 25% almost of homeowners, right, would have to sell if it goes up again. That is quite a substantial group coming in. But again, like you're saying, that's not specifically something we've seen on our side, because we have that that pesky stress test that a lot of people aren't really a fan of. And when it did increase over COVID, the last year or so, it had interesting results. But again, the point of it is to protect against any rate hikes. So I think many of our clients were not necessarily seeing this, but I guess to some Canadians it is a factor.
It is. And you're right. There is that pesky stress test that has implemented that conservative qualifying rate for all Canadians where, if you're getting a mortgage, you have to qualify at that qualifying rate, which, for a lot of variable rate holders, they received a mortgage of 1.5 or 1.7% just months ago, just maybe last year now, 12 months ago. But they were qualifying at 5.25%. So, really those folks are able to withstand a mortgage conservatively up to that rate. However, it's maybe these 1 in 4 Canadians, Sam, that have potentially taken their mortgage and then since then maybe purchased a few brand new vehicles, taken on some credit card and line of credit debts that have pushed them into a situation where maybe this does hurt quite a bit with all the obligations on them. Anyhow, looking at some other items is that the clients, what is the growing sentiment that we've been seeing from our clients? And I know that at this point, it's more that they are expecting it rather than fearing it. What is your sentiment there, Sam?
Yeah, I think the same. I think especially because of all of the rate hikes and all of the news articles, I feel like a lot of the clients that we've chatted with and that I've spoken with are informed enough to know that they're catching on to a trend that rates are going to be hiking and they're going to be increasing. So I think on my end, I've experienced a little bit of maybe hesitancy or really wanting to think out the process before getting in the market or before committing to a fixed versus variable mortgage. I find that a lot of them really want to chat through the options and have time to process where they think the market stands and where they think it's headed.
You bet. That's right. Well, I know we have a rate announcement just around the corner, so what we'll do is we'll go over these last few items here. Last time there was a rate increase, Sam, we're looking at June 1st of 2022. I think that was an increase of 0.5%. We also saw a increase in March 2020. Last decrease was March 2020. So it's been a long time coming, these increases. And seems like all websites are reporting at least this increase happening today. Wouldn't you say so, Sam?
Yeah, absolutely. We've seen, lots of commentary on inflation, the target overnight rate for the end of the year. And of course, we have our percent chance of rain today from Mortgage Dashboard, giving us a percent chance of a rate hike, which again is sitting at 200%. So again, I think Mortgage Dashboard is also pretty bought into the sentiment that we're going to see a rate hike today.
You bet. I think so too. And so looking at today, just some regards to those who are looking at what's going to change if the rates do go up. If rates do change, those with variable rate mortgages, home and equity lines of credit, variable rate car loans, unsecured lines of credit, and variable rate credit cards will be affected. If rates change, payments will either go down or decrease accordingly, or increase, go up accordingly. I know that with certain variable rate products, Sam, we've seen banks set it up so the payment does not change. It's the length of the loan that's changed, right? So we've seen those, and that's a static payment where the amortization does change. So looking forward to seeing what we have on today. Sam, do we have the data available to us yet?
We do have the data, and you may want to hold on to your hats for this one because we did see an increase.
Here we go.
By 100 basis points.
Wow.
So even higher than the forecasted and expected 75 basis point increase. We saw it increase by 100 basis points today.
Wow, that's just amazing, Sam. I've never seen an increase of this magnitude in my mortgage career. So quite an announcement from the Bank of Canada this morning. A 100 basis point increase. You've heard it here today. Sam Thompson reporting here on Canadian Mortgage Weekly Live. totally caught off guard
Mhm.
with these reports coming in where we are seeing a 75 basis point increase. Sam, did they release the monetary policy report as well today?
Yes, so they did release the monetary policy here. I can go ahead and actually share that with you guys.
Yeah, that would be great. In the meantime, if you have a variable rate mortgage, expect your payments or amortization to change accordingly. And let's look at this here. We have the 100 basis point increase. I would like
Mhm.
to see what their sentiment is going forward. Talking about global inflation, how that is
Mm.
higher. Still talking about the impact of the Ukraine conflict.
Mm.
Uh,
United States, high inflation, interest rates contributing to slowdown. Mm.
Interesting, China is mentioned as well with COVID-19
Yeah,
again. And oil
of
prices
course.
remain high and volatile.
Oh, and a slowing of global economic growth to about 3.5%.
So a slower 23 and a little bit of a hotter 24.
Hmm.
Low unemployment, widespread labor shortages, and increasing wage pressures, strong demand, and wow. So GDP growth has been at 4% in the second quarter, which is quite high. It's very
Hmm.
good. Wow. Skipping down to the last paragraph. So it looks like Bank of Canada has mentioned that it clearly sees excess demand in our economy. And that has been really noticed with building materials, with folks being off during COVID and doing extra renovations and setting their homes up for in-office conditions, like home office conditions. Just building materials have gone up dramatically. I know labor has gone up dramatically as well. Um, vehicles have gone up quite considerably because there's such a demand for new vehicles and there's such a low supply as well. And as we saw, the industry we're in, Sam's housing became such a commodity and such a high demand item. So I guess we'll have to see what happens in, further. Today's 100 basis point hike is pretty historic.
That's right. Yeah, I don't think too many people were expecting that for sure. It
Wow.
caught us off guard.
Yeah, it definitely caught us off guard and a very exciting day for all Canadian homeowners. Um, if you have taken a fixed rate mortgage during the 1% and 2% market, then you are probably laughing right now thinking that you made out well. So great job if you've done that. If you've taken a variable rate mortgage and you are experiencing this rate increase, then it'll be a wise decision to relook at your budget at this time and just to weather out the storm over the next little while as the Bank of Canada combats inflation and weathers through this storm. Because as we've seen in previous economic times, Sam, it doesn't last forever. And with variable rate mortgage holders, there is a possibility that they can still save on the other side, maybe 6 to 12, 18 months from now when this all passes through.
Yeah, it's true.
Yeah.
Hmm.
So thanks very much, Sam. So when's the next announcement? I think it's in September.
Yeah, so the next announcement is going to be Wednesday, September 7th. So we've got some time to review the monetary policy, have a look at, in further detail what Bank of Canada is planning come the fall. But it'll be interesting to see how they follow up this rate hike. I know that some of the sentiment from a few banks, leading up to the announcement today, we're still expecting a few rate hikes towards the end of the year. So we'll have to see if that's changed, and where things are going to go from here.
Absolutely, yeah. It will be a very interesting show in September. We'll have to see how this 100 basis point historic rate hike has impacted Canadian homeowners over the next summer months. Usually we do see the market pick up towards the fall, so it'll be interesting to see how the market gets affected. And we'll have to get a couple, pieces of information from some local real estate agents that we can share on our show as well, to kind of share what's happening on the ground level there.
Mhm.
So great. Just in case anyone doesn't know who Sam Thompson is, he's a mortgage agent with Mega Mortgage here. Over 2.5 years now working with our team. Sam's great to have you on. You're originally from Ottawa, Ontario, and living with your wife here in Barrie. So just great to have you on the show and for having you share your expertise with us.
Yeah, thanks so much for having me, Joe. It's good to be hosted by you. You've been in the industry yourself for over 11 years. We're getting dangerously close to 12 years in the market. So definitely no stranger to some of these rate hikes. I mean, 100 basis points you said you haven't seen before. But again, thank you for having me on the episode, and yeah, for all of your insight and expertise into the market.
Thanks very much, Sam. So thanks for watching today, everyone. If you feel like you like or want to share this information, feel free to like, comment, share this video with your friends and family so they can see what's happening with the market. Feel free to join us on our episode tomorrow, episode 88, as we cover off how much does it cost to transfer my mortgage at renewal. So that will be a great episode to watch as we continue renewals month. Because a lot of the times when it does come up for your mortgage renewal, it's a great time to shop around and it usually doesn't cost you anything. Yeah. So join us here on Canadian Mortgage Weekly Live, Canada's only weekly video mortgage news podcast, and we'll see you next time.